Greetings, market rebels. Welcome to this week's macro measure video combined with our sector situation video. It is Sunday, March 16th, 2025. It's a little after 1 p.m. here on the East Coast, and we have to get right into it. Here is our trusty disclaimer. Here is our trusty intellectual property rights notice from Market Rebellion. And then here is a quick snapshot of last week's macro measure and sector situation summary, stream of thought summary. Anyway, I highlighted things in pink because the colors were getting tough to get contrast. So highlighted kind of the big stuff that we talked about that maybe was worth highlighting again this week. And I think you'll see a lot of things are really carried over, and those are some of them. But effectively, a quick review would be that the most likely scenario, as the NN, I call it the NNMLS if you're new, news neutral, most likely scenario was a relief rally attempt. And really, we didn't get that until really the end of the week. So it was more ugliness. So the most likely scenario is really taking it on the chin the past couple of weeks to start the week and even to continue on through the week. I think the prior week there was news that kind of intensified problems that were already unfolding in the market. And then this week, I think Trump started the week with some China tariff stuff and some other stuff. And that was maybe set the tone a little earlier. You can never know for sure exactly what the issues are. And like, as I always say, I'll remind everyone that I'm from the school of a lot of times things are used as an excuse to provide cover. A lot of times there's internal plumbing issues that are essentially right firms that are really caught flat-footed, ill-positioned, whatever you want to call it. They've got to get out. They've got to do this. You've had CTAs just bailing on this market in a really big way. Some people are saying to a historic degree. So they've actually gone from super long to super short. I'm sorry, super long to short, excuse me. And so that is also very interesting that we reached, I think, maybe not the most incredible readings in terms of oversoldness and really poor sentiment, but we've reached some of that pretty strong levels of that, right? And so those are typically things that are, in my experience, right, that precede or set the conditions in place that precede relief rallies. But we didn't have that, so it was a pretty serious situation until the gang did what the gang does, which is did great work, and then started moving things back up. And I do think that Thursday and Friday, but Thursday was really a big day in my book. Technically, the way that things sort of ended up shaping up. So this week's. So if you want, I don't really think I can highlight much else from here. We can always go back if anyone's in webinars and has questions about anything. Be happy to try to answer those. Also, this week, I'm calling it Relief Rally Attempt 3 is really the headline. The news neutral most likely scenario just has been smoked, as I said. So maybe this time, the third time, as they say, will be the charm. Maybe we'll see. I would think so. I really do. But I mean, I thought what I'm really getting at is the most likely scenario has to do with me just sort of sizing it up from a lot of experience, looking at the window, looking at the market through the window that I look at it through, and saying, given all things, right, what's most likely to happen and what typically happens probabilistically, what has a high degree of likelihood, and then trying to not overthink it too much, but every now and then I try to say, but I think it could be really the outliers or lower probability things could develop here. I thought after the first couple of weeks of selling, they would put something better together than they did, given how we had gotten rocked pretty strongly, pretty quickly. But it persisted for another full week, and then really another half a week from there. So you could see that I think it was very forceful. But what I think I'm going to do on this particular side is to say, if you want, go right ahead, take a snapshot, and let's just cover this and some of the points on here as I bring up the charts. I think that would really maybe expedite things, and that way we'll get a better flow going. So just bear with me. I think I've got to stop the share briefly and then reposition some things off my main screen so that I can broadcast my main simple charts that are some of the clearest ones I can show. Let's see here. This would be screen number 3, share. So what I've got queued up, and this is one of the points, you'll see it, I think, on line 3, is that I'm looking at this Mag 7, and this is, as you all know, this is the big boys, and these are the big weights. And so as they go, often the market goes, and even if they don't go along with the larger market, they can buoy things, right, and prevent the indices from really getting worse or what have you. So overall, really, it's not a great picture given what's happened over the past month. But I think last week you have to really think of ended on an encouraging note. So to review that, let me try to get. Well, let me see if I can get the something going here that will give us a better I want to get Zoom to give me a little bit of maybe it will give me anything I can work with here. Let's see. Nope, it doesn't like that. Okay, let's see. Zoom is not letting me grab what I want, I don't think. Maybe it will. I don't know. Nope. Nope, it's not letting me. I wanted to do more of a share. I'm going to have to go back to my pointer and just kind of point it out here. But here's Monday, kind of with the continuation, getting below the 200 SMA represented by the purple line. Remember, this is the Mag 7 as a package. There's no special weightings or anything like that. Just all the symbols combined together. So we start out the week. China tariff, I believe, was what the news Trump had made over the weekend or incoming that morning, sets a pretty bad tone. They do the turnaround Tuesday thing, and this is interesting, right? That you get below, you immediately start recovering above the 200. So again, the 200 being this very widely followed SMA, even by fundamentally driven, often fundamentally driven money managers. And it can often be a place where a lot of people capitulate, a lot of new shorts jump in thinking the end is near in terms of the whole market getting crashing. People seeing that break and they trade on it. And you can see, right, the gang is great at reversing from there, which is why I always try to remind folks on any breakdown type scenario, you've got to really, if you don't get the move, it doesn't continue, it's probably better just to either hedge or get out without having lost much or maybe made just a little and then reevaluate rather than overstaying your welcome, because they did move things up pretty strongly against you just within, a session and a half. So just that's another great example, just like this false breakout was another great recent example there, and they just reverse it down hard on you. So we reverse back up. Then, right, they make it look like part of the pattern, very, very short, brief, not such an incredible relief rally. Oh no, we're diving down again and we're going into the weekend, and that's typically not good and all that kind of stuff. And you close below the 200 again, probably flushing out or bringing new shorts, people that didn't even sell here and were a little more patient. Now they're maybe getting worried. You even get a close below the 200, then lo and behold, they reverse it back up. So the way I'm looking at this is that, right, they tried to break this down and they really weren't able to. And I think this day here, where this kind of held and didn't really intensify beyond that and get even worse and worse and worse, was really important. And of course, Friday was the continuation of that, being that save and just the entire candle being above the 200. So this is sort of silly stuff in my book, but just having observed this stuff over the course of decades, I feel like this is a really good sign to end that particular week. And you're right at resistance. So I think at this point, just a little bit more push, and you ought to be able to get up towards that that resistance line, and that's right near where the declining 10 SMA is in white, and the 150 that's kind of that rust colored brown. And if you get through there, that should, if you get through there or just in that general vicinity, that should, I think, open things up a little bit more, given how atrocious the AAII sentiment survey numbers are, some of the worst readings on record, from what I understand. CNN fear greed, again, imperfect measures these are, but both of them are registering really deep oversold, typically very contrarian when too many people are bearish, super bearish, and that's really where you are. You, especially right when you're in, you've already fallen this far this fast. I think that this far this fast though ultimately is the problem. We talked about that a little bit on Cocktail Hour, where when you do fall this far this fast, usually that's not a good sign. Not always, but usually not a good sign. So that can mean that really the selling may persist. There may be another leg of it. But a lot of you know me. I'm not trading the next declining leg right now. I'm going to try to take it as it comes. And I would not be surprised in any way if this were a feeble rally attempt, nor would I be surprised if it was a super strong relief rally attempt should it come. So I'm just really trying to maintain that trader's flexibility mentality, right? Where I'm just going to be try to be as nimble as I can and take what comes my way. And so if we start to see really good signs like we did on Friday, where I think money did start to flow back into the market, and I do think that a lot of names started to behave much better. And there is some good signs of emerging from deeply oversold. You just need a little more push, I think, and it should probably set the ball rolling to the upside. And I would think that just looking at Mag 7 here, I would think the 15, it doesn't really, if there really is a real like FOMO, let's get this risk back on. I think you're looking at realistically coming up to where the 20 and the 100 are there, represented by light blue and the dash white, respectively. So that would be a very reasonable target. You could see that we danced around that level near there before with these candles. There was kind of a hesitation near there. That's sort of been support and resistance near there back in the past as well. So I think that's not that not that anyone's trading this basket, but that's about 30, 50. And so that's another several percent, to go up higher from here. So that would be a nice, right? That would be those lifting up several percent. And that's what I would call a relief rally. And we have to then see, maybe you get more, maybe you get less, which brings me to scenarios. So instead of really charting this, I'm now just going to switch over to SPY, and we'll talk about just market scenarios. And we usually use SPY to represent the market at large, really our proxy for the market. So we topped out here back on 219, and maybe we bottomed out on Thursday, and that would be 313. So right now, I think you have to say you were well outside or well below your lower Bollinger Band. It was pretty seriously extended to or stretched to the downside. You've got the selling kind of leveled off volume wise here. So after it spiked earlier, it kind of declined, picked up a little bit with that lower low, and that was it. But it wasn't some major spike or anything like that. So it looks like there isn't really heavy duty stuff to come, because that lower low didn't really bring about even more selling. So I think that might come into it. I don't talk about volume that often because I think so many things are really hidden from us versus the old days that we really can't see the full volume picture. But I just think that little note is worth it. It's kind of an encouraging sign. So with that being the case, with with RSI and other indicators, similar indicators registering right significant oversold readings, and the breadth being what it is, to me, this definitely has a chance to extend this a little bit. And you can see the 10 SMA has now crossed below. That's the white line. That has crossed below the 200 in purple. The 200 in purple would be the next one up right there. And then your resistance line, we would leave there, because these two, I think these are good anchor points, or pretty close. It might have shifted a little bit on this view, but still pretty good anchor points overall. I think that's all waiting for the market when it gets back up here to the 38% retracement level from this bottom. So that to me is a really kind of, it all makes sense kind of a level to get back to, and that would be about 574, 575. And I think we talked about that level on the way down as well. So I think that level is what I would look for, and it's really not that big of a deal, right? We're only talking about what that would be, I think 12 points, so 2%. It's only really a 2% pop to get into that vicinity. And then I would evaluate it from there, right? If it's still going strong, great. And I wouldn't rule it out in terms of, if I wouldn't rule out more. This that usually, right? The reason I would say that has nothing to do with the fundamental aspects or anything like that. Really has to do with the trampoline effect, because you did fall very hard very quickly. So getting a better springboard back up wouldn't surprise me because of that reason. It often happens, and then people start feeling better about it. The better the retracement typically is, the better people feel about the market, and the bears feel not so wonderful about maybe another leg lower. And the market's great at tricking people, but bottom line is, yeah, if it's feeble, then that's really bad, right? That would be the bears kind of winning. Okay, we let you have your chance, bulls, and you took it up and you rolled over. So let's talk about those scenarios that could happen. And what I would say would be, right, you rally, you clearly put a lower low in here and you roll back over. You come back up to here, it would still be a lower another 10 points near sort of the 585, 586. That would also be really lower highs as well. So that's what you've got to be on guard for. You also have to be on guard for, it gets up to the 200, as we've talked about, near in that vicinity, rolls back over, and then you have to look for the higher low. If it rolls back over after popping, comes in here, puts a higher low together and goes, that would be, I think, an excellent development for bulls, for the market overall, because I like to see mild pullbacks after a good strong burst, get a mild pullback, be very close to key resistance, and then be able just to spend a little energy to get to that key resistance. And then that thing, in my world, that gives you a better chance to push through and go further. So that would be another scenario. Another scenario would be, well, it doesn't have to rally. These are all assuming it tries to rally. Another scenario would be it tries to do what we talked about, but then it comes back down to here. And in a kind of like a full retracement back to the bottom. So remember, that would create sort of like a cluster low bottom against maybe like another cluster low bottom, or a one-off low bottom, and then you go. But anything of just a little bit above, at the same level, virtually, not identically, of course, but virtually the same level or slightly lower, that's all sort of potential double bottom type scenario that you would maybe try to launch from as well. And remember, people are going to be, if that should happen where you come back into this vicinity of Thursday's low, which could happen, right? Especially if news intercedes between now and then you have to really say what's going on. And if you start to see this whole market that really tried to put in, I think, a strong technical showing, start really getting lamped all over again, that would, I think, really be concerning. If you don't see the market really completely deteriorating and they're not selling everything, and it's just sort of like weakness in several areas, but not across the board weakness and things like that, then it's a different story. But I think some signs were encouraging. I'll go into those. But for now, I would say start thinking about scenarios, right? And so you really want to be prepared mentally for what can happen. And like as I said, the worst case scenario would be we don't do very much and roll right back over again, and you see the heavy, intensive selling, highly intensive selling, step up and kick back in, and that would not be good. But I'm thinking more they get the relief rally due to conditions, assuming news neutral. You get a good relief rally. How far it carries, I don't know. Like I said, because of the significant decline so quickly, I think it could be a solid one. And then we see what happens. We have to then see what happens from there. The seasonality should be turning better as well to help the bombed out situation across the board. And I would say, given the disruption factor that Trump represents to the system, The system loved the way the system was working, right? If they didn't love the way the system was working, they wouldn't have had the market where they had it at. So everything was working, all the monetary liquidity and all the rigging that we went on here, there, and everywhere by most parties. It obviously helped bring the market to an all-time high, along with the animal spirits, FOMO, YOLO, all the rest of it. And a lot of it was predicated on what I would call dubious data at best. I'm not saying that the thesis department was off. We're thinking good things about this, that, or the other thing. I think a lot of the data they tried to use to justify it was completely bogus. But it just gets worse and worse over the course of time. And it doesn't really matter to the administration. From what I've seen, they all kind of just keep getting more egregious. But we'll see. Hopefully, at some point in our country's history, that'll turn around. But anyway, point being that I think this has another leg after this if we don't start to see the news leave the disruptions, which creates the uncertainty of what's happening, what's going to happen next. If that starts to I guess, tail off, and we start to see less disruptive announcements and things like that, I think, and people start feeling like there is more certainty as to what's likely to happen, then you'll start to see the market improve, and you may be able to avert a second leg lower, which maybe would also be helped by the Fed rate decreases, which I believe there's at least two expected this year. Maybe the Fed starts sounding a little more supportive of the market, of the economy than they have been, and that helps the situation as well. So that's something else I think to think about. But that's really the scenarios I'm talking about. You can see these levels on the retracements. As far as if it doesn't work out, if it doesn't work out and we just keep going, we have to at least cover that in SPY. And let's go from where we made the low at and see where we can find that there's probably going to be good flatline-ish type support. And that's going to be down near 542-ish, somewhere around 540 to 542. There should be decent flatline support, but you're probably really going to have to look at other fib retracements at that point, and you're probably going to have to look at things like weekly moving averages as well. And as we talked about before, this is the 50 week that they tried to cling to by week's end, and they got it. They kept it really close. It might be hard to see, so let me just try to. They kept that really close to the 50-week SMA, which of course is very similar to the 200 daily SMA. But the next level's down. If some of the flat lines and things like that and other fibs that we could probably find in there uh, do not other than that, this next one down is the 100 week, and that's going to be right near 510. So that would be another, nearly another 10% haircut for now. There's other projections I would give, but yeah, that's it. So this is a pretty serious break. As you can see, it's a little bit different than all the other ones because uh, it got pretty far down below it, and we're not far enough away from it yet. So there is some risk there on this weekly chart. But I think you have to say, as of right now, give the trend the benefit of the doubt. Give it the benefit of the doubt as well. So that's another thing I think that argues for you should probably get more of a relief rally than you've seen. So those are the scenarios that I really wanted to mention. We could say, what about this launch, right? If you just want to take this leg from ARC of 23, and you say, what about more retracement here? So let's do that to get a little bit bigger picture retracement on it. So that's going to be, you know what? I always get this between, yeah, I always get this between Thinkorswim and TradingView. I'm always guess wrong. I can't, I just can't get it locked into my head for some reason. So let's put this here and I'll make an adjustment. Oh no, yeah, I actually had it right the first time. My apologies. Get this to remove that drawing, give you this fib, and come up from the bottom. We'll see how far it would, we'll see how far we would drop. Let's go to 6, try to get this 613.23 at the top. And then at the bottom, we're doing the 409.21. We could do this on the weekly, if we wanted to create a different chart, we could do it on the daily as well. But that the 38.2 give back comes at 5:30. It looks like I'll have to reposition it so everyone can see it a little bit better. It looks like it comes in at 5:35.29. So that's a little different than 5:42, which is, worth noting. And then the 50% comes in at 5:11, which is very close to the 5:10, obviously, that we just talked about in terms of the other form of support. So I think those are your next big levels. Five on the downside would be you crack the low, 5:42 ish, 5:35 ish, and then 10, 11 ish on SPY. And then we'll go again, then we'll go from there. And like I said, I don't like to make these. I know a lot of people, that's the school of thought. That's the conventional approach. That's what some people expect. And I just think for short-term trading, um, you're getting yourself locked in and entangled in things that you don't really have to worry about. You really are trying to work with the here and now, and we know that things often contain wrinkles. So since we do get wrinkles or curveballs thrown our way in short-term trading, we've got to deal more with the here and now, not really what's going to happen. Maybe with another leg lower. As much as I think there will be one, I don't want to make that the focus of now. So we'll see. I know a lot of Elliott Wave people do, but Brian McCormick's, I think, shares a similar view of it. It's not as if I think there's really good things that it offers, just that I think it's sort of bigger picture, kind of longer term oriented, maybe position trading, if you will. It would be better. It tends to be, I think, better suited for stuff like that than it is for day and swing trading, which is what we try to focus on. So having said all that, that's the spiders coverage. I'm going to go through the line by line. We talked about the contrarian historic readings, how they're off the contrarian. We talked about seasonality. Let's talk about leadership getting back on. And first of all, one thing that makes it a little bit more believable, maybe, is that the VIX really dropped off, which is good, but it kind of hurt me because I thought I got all my VIX calls off. I was fortunate enough to start getting into the VIX, excuse me, when it was around 15, and with my sense of what was maybe shaping up in the market, and everything was going great except, and I got out of 80+% of what I bought, but I still didn't get the final VIX position off. And I got busy, and by the time I saw it on Friday, I'm like, let's see what happens here today. Yeah, and by the time I saw it, they really socked it to me, but that's okay. That's okay. I'm still up money on what I've got left, and I can't complain because the rest of it worked out pretty well. But anyway, that's looking pretty bad, and I think that plummet by the VIX back down to lower levels, it got near 30, wasn't able to reach that mid 30s the way that I thought it may. So I think that's a good sign. That kind of tells me that maybe risk on a little bit, and that maybe the flows peaked. All the outflows and the CTA selling, the fact that they got short. I mean, it's kind of good that they got short. Hopefully, the hedge funds got short too, because because usually, right, the pain that happens there and with those two usually helps to get some juice into the rallies. We talked about the Mag 7 maybe subtly setting up to reverse with a nice little technical action I think it put in. We also saw that the Bitcoin crypto complex looks better, right? It touches the 200 in purple, and now it looks pretty interesting, right? Where it can at least try to make a relief rally move, maybe get to the top of the descending channel it's trading in. And I think you have to like the way that it closed on the week right there. So I think that looks like it's primed to try to move higher as well, which again I'm calling kind of indicative of more risk on. And let's get we want this to be off fly. So that would be a welcome sign. At least it's trying, right? I think there's a little attempt being made or being set up, just like the Mag 7, and then SMH and the related XLK. Yeah, this has been one of our arguments as to why there would be problems because the SMH wasn't behaving well. If it ultimately broke down, it would be really bad for the market. The Nvidia stories being called into question with kind of like Enron-esque stuff. I don't know if it's valid, but it's shaping up that people continue to dig and find things and claim that they're more confident than ever. Don't hope that's not true. Not I just don't know what to think about it, but it is a risk if it is clearly with how much buying of so many stocks and how much capital flew into this market that would maybe that was predicated on again really deception. So I mean SMH looks good there to me. That looks like it's ready to try to push towards that declining 20 in light blue. I mean that's just me. I think that's where it's looks like it's headed. Again, news neutral, most likely scenario, given all things we've discussed. I think that thing moves up. And it would try to maybe attack some of these declining SMAs now from the underside. And we have to see if they keep it tamped down. Clearly not good, right? Obviously that's not good. But we have to see when we get there, and that's if we get there. But yeah, I think that looks like it's technically rounded the corner and really ready to go. It would be disappointing to me if it didn't at least try to do a little more than it has so far. Given the way that it works and all things considered, as I said, we'll use the cues on this one, but I think they're obviously worse off than the SPY. They've got more reason to rally in a sense that they were battered, more battered quickly. I'm still concerned. As I said, I do think there could be another leg lower, but I do think they're going to want to try to at least work this back up towards the underside of the purple 200 SMA right there. That would be my sort of odds on note. Start the week with news neutral, relatively speaking, and you at least get back to there or near there at the very least. That would be my thoughts. So I think that's looking pretty solid that way, and I would say that this trend this is more of an intermediate trend. The long term trend I think is still intact on this. So, right, we're still near that 50 week right there. So one little dip below there, you really can't say that the trend is being threatened, but I would say given the proximity of the close and how sneaky bastage these guys are with what they do, yeah, I think you got to see what happens next before you say no that this intermediate term trend is toast, it's completely over. It could be. It's just that I would wait a little bit longer, knowing how the gang likes to operate below widely followed key levels, especially if things were not nearly bombed out there and you had been churning beneath this for a while, and then you started breaking down again, I would be more about, yeah, this is really bad, and let's give up on it. But because you plunged so quickly and they tried to save it and that you got so bombed out and your market breadth and et cetera is so atrocious, I'm willing to say let's hang in there with it for now and we'll see what happens. So that's just me. You don't have to do that. I'm just always just giving you my take on it. So the long-term trends, not even going to cover that, but I still think they're intact. I'm super pressed for time. I apologize. I wish I had more time to put into this, but that's just not going to change probably until maybe next year. So I'm just doing the best I can. So there's some of the, so we talked about the price action scenarios. Let's talk about those. I'll talk about if there's anything I can add on IWM, right? Similar, right? There's your 200 week in purple there. Same or similar situation to the other indices we've already discussed. Really, right, bombed out, but with yields maybe stabilizing, maybe about to fall. Maybe that's a little bit of a life preserver for these guys. Got really close to bombed out. Right, you got below even the 200 week on this one, so pretty serious stuff. Really stretched though, right? Really stretched to the downside. So I do still think that if you look at the daily, this with a little bit more push, I do think this thing's going to try to again work its way back up towards that 20 there, that declining 20 in light blue. That would be my ballpark, right? That it puts together maybe like a 3 to 4% rally, and then we see if it has more juice, if it gets there. Could be wrong, obviously, right? If it breaks down below the low and it does it quickly, if you start to see this market breaking down on Tuesday or Wednesday, and this rally attempt again had no legs to it. After all the good stuff that's happened, I would take that pretty seriously. That's really a market that's struggling that much to find a bid now that it's so quote unquote on sale. That's a problem, real problem, I think. So diamonds will I think will likely test the underside of the 200. The 10 SMA is going to come in right there, which is white and declining. Get through there. You can see the 20, the 15, the 150 all kind of bunch up there, and we switch back over to percentage because Thinkorswim just has to do this to me every time I record. But anyway, that puts me around 430, call it 429, 430. So nice round number. That would be about almost 5%, 4.5 to 5% from there. But as I said, I'm not going to bother with it. Again, if you want to ask in a forum, a webinar, can you give me some fibs? What about other levels of the downside if this intensifies? Always happy to help around other responsibilities. No, not a problem. Let's see. Yeah, you've got to trade more definitely during these phases. Oh, the sectors, that's what it was. I wanted to show kind of how I think the sectors are giving us a little bit of a hint that maybe things are getting a little bit better, right? So here's our broad look at the 12 major sectors we typically track. Not going to go into too much depth on them, but energy kind of coming back is a good sign. The XLK coming back right after that kind of bottoming pattern, cluster bottom. I think that's coming back nicely. The XLC, which has been a big time leader, this barely exceeded the lowest low back in here. And now they've reversed it back up, maybe after flushing out some people that were trading against that. Again, I think it's primed to go, just not behaving as well. But these are leadership sectors, and this is an important sector, and they're all looking a little bit better after the drubbing. So are financials, another important sector, right? They're also looking better. Similar lows, so almost like a double bottom potentially. You can tell that there's support around, right? We know there's support around here where it kind of found support and it's trying to launch from there. We'll see, right, if that can get legs. These defensive sectors did not have a good week, so that's a good sign. These Dow-esque sectors, the materials, I saw a ton of bullish paper at FCX and some other names that are in kind of materials. But these are not doing anything special yet. But just the way that they work back up on Friday strongly. I mean, they're poised to, I think, join, not necessarily lead a rally. The other problem zones, though, are the fact that the discretionary and transports are not looking good. I don't think you can spin this as looking good. So this is really sort of problematic in my mind that two other important areas are probably due for a relief rally, probably would get one if the market brings about one, right? If we start to see the market really start to go, it probably gets a little bit, these probably get a little bit of lift, but they don't seem poised to rally and lead. And you want to see better performance out of both of these, especially after the drubbing that we've seen, and they're just not there. And you can see the RSI readings are predisposed to want to try to rally at least a little bit. But this is not good. To me, this is not good. There's some signs of other good things, but they're kind of more relief rally signs to me at this point rather than permanent bottom put in. Hope to be wrong, right? You not, and I'm not really strong on that either, but I hope to be wrong. Hopefully that we do have a bottom here. It was a great buying opportunity. Um, but yeah, I mean the wild card here though is I don't even I'll fully admit that I'm almost don't even know how to think about XLU at this point. And on the one hand, right, it kind of bothers me that XLU is getting bid because of my years of looking at that as well. If they're buying that's so defensive. Why are they doing that? That's not a good thing. Meanwhile, with everything supposedly the data centers and um, all the other Bitcoin mining and et cetera, AI usage, all this stuff. This is also maybe risk on. So I really don't know. I really don't know how to interpret this. I probably need to spend more time, read what the thoughts of other people that spend all their time on things like this, that I don't have time for. See where the consensus is maybe shaping up, see if that sits well with me. But I really don't know what to think. Um, I don't know. I just don't have a really good comment to offer on that at all. So I have to just apologize for that. But it's kind of like beyond me right now as to how to interpret that. Just don't know. Very simple. So overall, I think the sectors look pretty interesting that way. If you and kind of on balance, I think they look good. Let's bring in market. Oops, it doesn't like that. Let's bring in the market breadth. Quick look at this particular screen that we share, and I think you can all see that at least right we kind of ended on a high note. We kind of ended on a high note. So things did get pretty ugly, and they started to work their way up towards the close of the week. So I don't think anything is extraordinary about this, where I would say, well, this is indicative of a bottom, because I don't think you got on these views at least, you didn't get as smashed as other times, right? Smashed as low or as hard as you have at other times. But I do think it's enough that it can lead to some sort of relief rally attempt for sure, the way that the whole package shapes up. So I just wanted to make a brief mention of that and the sectors, because I've got to cut these videos down because of the way folks want them. But as I've always said, it's very hard for me to formulate pictures and sort of takes on things without looking at a lot of things, because I think it's all kind of interconnected. So for me, it's more than just looking at the price action of this or that. I need to see more like a fuller, robust picture, at least in my own mind. That's the way I look at it. So let's see what else is there. Yeah, so I'm sticking with the politics aside comment on that screen from Trump. Just that the market, not knowing what's coming next creates the disruption that creates the uncertainty, and the market typically is not a fan of that. I am still sticking with the wouldn't rule out dramatic events that I've either been way early or wrong about. I'll either be permanently wrong about them at some point, or I was super early thinking something could happen. That's just not run of the mill assassinations or something like that. Um, if there is such a thing. Anyway, the off-camera data a little bit more mixed, but I still think the volatility is going to persist for a while. I don't think the off-camera data is that great. I think there's going to be exposures on the rigging and how egregious it got. I don't. Hopefully, it'll get cleaned up. I'll believe that when I see it, though, just because I don't know. I'm sure there's worse places than Washington, D.C. for that, but I don't know what's a higher profile uh, situation than Washington, D.C. in terms of fraud and corruption and disingenuousness, and all the rest of it, bogus, torturing of statistics, blah blah blah. So yeah, the relief rally most likely scenario, assuming news neutrality, that's been feeble and fleeting, right? These rally attempts have been bad, and 2 weeks in a row, I think that's what normally happens, because if you go back, we were already kind of beaten down hard a few weeks. I don't even want to have to go to the exact day, but I know we were near the 100 in the SPY, and we came into that week and it just wasn't able to do much, even though you were already really beaten down. And I think it's really the this CTA selling and other sort of forced selling that has really lamped this market. And then last week, kind of sitting on the 200 in SPY, and really, again, with conditions that often, especially in bull markets, remember these were theoretically in bull markets, that often produces more of a relief rally. And again, we really didn't get one, didn't get anything really till the end of the week. So I think you, as much as the most likely scenarios, taking it on the chin, you can only go with what you really think. And I still really think this time they should try to lift this a little bit more. If they don't, remember, if you can't lift when you're this bad, then there's really big problems that are part of the market environment at that point, and you may not even be privy to what they are. So again, it comes back to just trading what's in front of you, the uh, just trading the price action, right? Just and doing the best you can with it in the short run as a short-term trader. We did talk about the VIX backing off. Let's flash the dollar up here. Again, another thing, it's kind of tough to make hay out of what's happening with the dollar overall. A lot of money shifting to other countries away from the US with, I guess, the uncertainty uh, due to trade relations and different things, and maybe the valuation levels of the US being so stretched, so on and so forth. So the dollar really obviously has taken it on the chin this year. Pretty big drop. We'll see what happens from here on that one and how it starts to affect the markets. Clearly, the market has lost that inverse relationship with it, where market goes up when dollar typically goes down, dollar goes up. Market hasn't been the case. Just hasn't been the case. The VIX we already talked about. Let's talk about the yields, which also usually work in somewhat tandem, but usually, you get the declining yields that usually help stocks, but yields peaked out on the high point just in front of where the market sort of topped out by maybe like a week or so. And you've been declining in yields and you've been declining in the market, right? So that relationship's kind of busted at the moment. And now these are lifting back up a little bit, sidewaysing at the moment, I guess. And the market's, I think, trying to lift based upon Friday's close and the week's closing action. So to me, again, that's sort of busted as well. That is just busted. And let me think if there's anything else I can share. I'm just going to look it over and make sure that we're good. So yeah, I do think just the final note, I might just bring this back. So let's see if I what can I do to shift this back over? Hold on one second. I might have to, yeah, that'll work right there. So we'll just use this screen for now. This week right there. Yeah, so I think, and let me get that. Well, let me have the laser pointer on here. No, it won't let me do that. Oh well. So yeah, so we're down here talking about this, and I do think that you're in that position where they definitely want to do at least a little markup. And you probably have some dip buyers seeing some turns, the on sale, all those folks should be coming in. I talked about this sort of the flushing, the gap closures that occurred, reversal candles that occurred, uptick in breadth, some of that stuff I wanted to mention. It all started to kind of come together Thursday and Friday, I think. So is what sets us up for next week nicely. And I think you are due for something more than what we've gotten so far in terms of relief rally attempts. Remember, news can really clobber, right? News can really trump the technicals. The technicals are good, of course, to work with, I think, but you have to admit that in the end, the real issue is if new news emerges, the market's got to is it's a weighing mechanism to some extent, and so you've got to when the market has to process new information that's macro, especially large macro, it can really matter, right? It can really change the current tide. So you've got to factor that in, but we can't do that because we don't know it. So we just have to go with that news neutral assumption and then see how news unfolds over the weekend. But I think that's it. I don't think I can add too much more at the moment. I think uh, I think overall you could see that the Mag 7 has a nice little sort of bottoming formation. You've got other things that are looking like they're trying to lift a little bit. And I think just the breadth and sort of like the heat map where a lot of stocks did better, and finally started looking a little bit better than they had been. Maybe we could look at just to kind of round it out and finish up. I'll take a quick look at some of the Mag 7s on the daily, and we'll just see how we're doing on those, right? And deeply oversold on Apple. So again, when you get this overdone on Apple and you're stretched that far in the short run from your 200 SMA and you have this inside day candle, it's I think setting up for a little bit of a comeback attempt. But again, you got to check the news, of course. Amazon, it's got the resistance waiting for it, but if it gets through the nearby resistance, it probably again is another. It's right at the. You can really use the 10-day as your resistance line, and to me, it's going to try to come up to here. That's going to be 204. So that's going to be a nice little 4% pop, 3 to 4%. And then you get up here and you're going to be looking at a little bit more at the 20. So I think that's the kind of relief rally I'm looking for. And I think it's poised. The Apple looks worse in a way, but because it looks worse, it's probably Apple and they probably come after it. Again, news neutral. They probably come after it. You probably get a little bit more of a relief pop from being deeply plunged, something that doesn't happen too often there. Google lagging a little bit. It needs to kind of work its way to that descending 15 in red near 170. Then we can feel a little bit better about it. Let's see Meta, what's cooking there. Kind of trying to put that kind of cluster low together where you have a lot of pieces of candles or levels within candles sort of bunching up. You're on the 150 in rust. You're holding for now. You may as well use the 10-day in white, declining 10-day as your resistance line there. And it's the same thing, right? It gets to the 15, gets to the 2050 confluence area, which is light blue and gold on my charts. And then you've got Microsoft again approaching resistance. I would use the declining 15 right there as resistance, 391.38. So basically, if it lifts a little bit more, it probably makes it to the declining 20. And then that's when the real fun would begin. You get above, let's say, 396 to round it off. You have a shot. You still have some turbulence, I think, to fight through, but if you can goose to 400, you're probably goosing up to you have a good shot to goose up to that declining 50 in gold near 412 on that one. So that to me is also looking a little bit better. Let's see about Netflix. Netflix, I would use the 10-day, the declining 10. That opens it up to the 50 SMA, I think, realistically, and that's going to be at 948.37. So Netflix, the way it moves, that would be quite a nice move, right? To go through 923, then you have a really good shot at getting towards 940, 948. So that would be a nice one to keep an eye on, maybe if this market does get legs and it's participating, because that's pretty good dollar movement. Let's put it that way. Nvidia, right, got smoked. Uh, Interesting on the smoking here is that look how much worse the price action was here than on this low, and your some of your readings were similar. So not really perfect divergence, but given how much lower this is, kind of a little bit of a hint of that, and they pulled a nice reversal off to that point. It's to the 20. You got to think it comes up to the 50 and 200 there in gold and purple respectively, and then taps them from the underside and then sees what can happen. See what it can do from there. Again, this would be news neutral. And I think that leaves us with it may just leave us with the Tesla. And probably you've got to use the declining 10 there in white as far as SMAs go. That's 255. So again, the 15 I'd keep on your charts. It tends to be more helpful, I think, when you're in bullish scenarios than bearish. But in terms of holding or holding the stock up, if you will, as it's rising. It does obviously act kind of to help tamp it down as well. But I think given the force of the drop, they're going to probably be able to get through there with sort of that trampoline energy because of how serious this was. And I think the 200 and the 20 will probably be bunching up by just about then on Tesla, and that's going to be right near 284-ish. So that would be one, right, that if the market does ignite again, another good dollar mover, especially for and a percentage mover, especially for a $250 stock. So, but these do look, right. This is all, a lot of these are counter to trend. In the intermediate term trend, you can see that is down here. I mean, it's really been lamped, but again, that every now and then I'm really more let's go with the trend. I gotta say, but even though that's my preference, you got to trade the market in front of you, and sometimes there's good potential setups. So when we do get some bullish UOA in this, should we get any early in the week and we haven't moved a lot, I'm going to want to have that in the UOA Pro log so that folks have a chance to look at that idea and set alerts and be ready to pounce if the market rally, let's say, intensifies and broadens out and Tesla starts to go along with it. So I think I'm going to end on that note because we did cover quite a few things. Just want to wish everyone a great conclusion to their weekend. Wish everyone a great week ahead. Hope that something I shared with you in this video helps you out in the week ahead or maybe some week in the future. And I'll thank everyone for tuning in. And hopefully, once I get through 2025, hopefully I'll be able to start, getting the stuff together and breaking videos into sections and things like that, like I hope. But I just know I'm under the gun on so many different things right now that it's virtually impossible. So I'll have to get to it when I can. But again, I hope this helps out. Thanks again.